Good evening. Welcome to our live Facebook. And of course, my apologies for being slightly late just now. And we are up in the airwave. Yeah. All right. So tonight we're going to be talking about what could a second Trump term means for the stock market. We could probably be talking also both from the US side as well as the Bursa Malaysia side. So let's get started, shall we? All right. Now, if you look from the slide that we have prepared for you, so it does seem that the US presidential Trump victory came as a no surprise to some of the Republican, right? That the so-called landslide victory was pretty much contributed to the economy expectation that Trump will do better than Kamala, and that's what actually we had on the day when the result came in. And of course, to my surprise, the Americans did vote for a criminal rather than a prosecutor. But if you look from it, Kamala Harris has only 102 days, less than 3 months, whereas Trump has been campaigning for the last 2 years. And depending on the kind of media that you do follow, a lot of people may not be in touch, especially the Americans in there, and they've been listening to Trump over the last 2 years as such that his voice has garnered more support among the American, and that's why Trump has also win the 7 states, the swing states. So we're going to be looking at the Trump second term benefit which sectors of the Bursa in 2025 and also the trading strategies we'll be looking at. And we're going to be looking at some US and Bursa sector set that is right now that we see in here. Now, of course, the dragon year, which I've been saying even beginning of this year in January, for those of you who have been with me for that time, the year of the dragon is considered as one of the best performer that we've seen. So next year is the year of snakes. We shall see whether the results according to the year of the Chinese zodiac will be favorable or not. But right now, the S&P 500 after Trump winning the second term, which came on November 6th, the S&P 500 has moved up to almost 6,000. And you can see the annual average return for the year of dragon, which is year 2024, has been 12%. But we have seen the market actually move higher than that. Now, the US presidential election nominees between these two candidates, and we have seen one goes out and Trump immediately emerged as the leader. As you can see, they won a majority stake around 294 states, as such that Trump managed to flip through 1, 2, 3, 4 states in favor from previously Biden holding to Trump, and this is how Trump won the 47 presidential election in here. All right, there are still 3 more states, but likely going to move in favorable of Trump, as you can see. So like what we said, 2024 from our last meeting that we had, the US presidential uptrend remained to be very, very predictable. So the market did dip back, and let me just show you what I mean. If you look at the futures chart, this is the Dow Jones. Okay, let me just bring this up here. Okay, so you can see the Dow, this is the S&P 500, sorry. So S&P 500 market came down here. Right, let me just make it a bit smaller. And then you can see right-wise, yeah. So we're going to bring this in. So this was this days going into the election. You can see the market came down as soon as the election were announced, and you can see the market actually started to move higher and higher. So this is what we are seeing. So no surprises if the market continue to push up. As I've said before, this is purely like a clockwork, and many of you will get the benefit using the Smart Roby as a guide in here, or using your charts to get into those stocks we'll talk about. So first of all, the Trump second term does mean tariff. That's right. He is a tariff man, for those of you who don't know. So there is a lot of tariff imposed on the products that is bringing in for the US consumer. Now we all know, like it or not, tariff does not bring in more revenue, but end up the US consumer will have to pay more, as such that you're going to be leading to higher inflation and probably going to be sustaining a higher interest rate. So that is what we have seen. But in 2016, when the tariff was announced in 2018, we did see the US market corrected about minus 0.4%. Didn't go as high as it did. That was the only year. Also, Malaysia stock market was also affected by the time it came in. So that would be 2025, somewhere on the second half of the year, should the tariff comes in here. And of course, US dollar has done pretty well. Partly is more tariff are expected against China, which we will talk about in here. So China will probably be facing more headwinds going in there, such that their currency will likely depreciate against the US dollar, which in turn made Malaysia ringgit also depreciate. Now, from the onset of the market that we've seen, Trump victory, which is around 4.2, the US dollar has moved up to 4.46. Later on, I'll show you in some of the slides in here. And then the third one is the Federal Reserve. Now, of course, Trump wanted to appoint a loyalist for his Federal Reserve chairman. And right now, the current Federal Reserve chairman, Jerome Powell, said no, because he do not want to be a yes man. So there is going to be a battle ongoing until the contract expired for Jerome Powell in here, because a loyalist of a federal chairman may be bad for the investor, right? Of course, market yet to see what kind of loyalists that we will be getting in here. So far, we have also seen the Elon Musk and Vivek Ramaswamy has been sworn in, or will be sworn in the January 2025 to be heading the Department of Efficiency, if I'm not mistaken in there. So that will be the two business corporate men in charge to trim the efficiency, or to trim the bureaucracy that we have seen previously in the US in here. Now, of course, Donald Trump being what it is known to be a tariff. So let's take a look at some of the tariff that this is from the Edge, and let's look at the publish what they have said in here. Now, Trump has stated that he will impose a 60% on China product. Whether he'll do it or not, we yet to be known, but during his campaigning, that's something you say, and a further 10 to 20% on other product that is going to US. So which means many of the products, now we can see here on the global scale, Malaysia accounts for 7% of the semiconductor flow and 13% of the backend operation and testing of chips. So Malaysia is a vital cog in the global, and they will be impacted by the US tariff in here. So a 10% they will have to pay up, so which means by the time it gets to the US consumption in here, the question is who will pay for it? Whether the US consumer will pay for it, or the local manufactured paying for it in here. Yet to be seen, but I think this is majority will be bear by the US consumer. So that would also raise the inflation that we've seen so far. This is definitely one of the point. Now, a 1% rise in the US economy is expected to contribute 1.7 increase in Malaysia manufacturing correspondingly. Now, this again may and may not fall through, because we have seen the Goldman Sachs report that came out. If Trump is appointed as the elected as the president of the United States, it will bring the tariff that we implemented will bring a lot of misery and a lot of hardship to imposing unnecessary tariff to the economy, raising the so-called inflation, raising the consumer pricing, and then will be a cutback on consumer, which may lead to a recession. Now, the positive side of a stronger US dollar, which already have seen it, will make our Malaysian ringgit weaker, so our export will be cheaper by all means, and also the Chinese renminbi will also become cheaper in that case. So it is cheaper to export to the US market, but this may be negated by the tariff that we've seen, 60% on the China product and 10 to 20% on the other product. Now let's talk about the big shipment of the US soybean to China. Now we've seen from the chart during the tariff war, which started 2016 to 2019, the trade war has pushed the shipment of soybean consumption by China, because they're buying less, they're actually buying more. Okay, China are buying more from Brazil. So Brazil actually benefited. So one of the terms that we've seen now, if like we saw in the rubber glove, where the biggest export of rubber glove is go to China, when US impose a tariff to China, then you see the glove consumption or the glove shipment to US become dropper, and then Malaysia benefited. So we will see something very similar to this. So that has also lead to more benefit maybe that comes to Malaysia. Now on the context of the CPO market, as we have seen, hitting 29-month high CPO prices. So a lot of people are contributing that the plantation is due to the win of Donald Trump, where we will see soya bean actually comes down, and from China will probably be buying more from Brazil, buying less from the US, and the CPO prices will be a replacement for the soya bean in here. But we do know US doesn't buy as much of the soya bean, but the soybean price, the plantation prices or the CPO prices actually gone up. This is because due to the Indonesia implementing a biodiesel mandatory 40% blend for all palm oil, which means there will be a supply tightening, because many of the consumption of the palm oil will go back to the making of the so-called 40% fuel, B40, right? So which means majority part of the world consumption will be used for fuel. But then again, it's kind of strange, because you see petrol prices also started to drop up, because Trump is considered as a oil man, drill, bit drill. So with more drilling that you see in from Trump perspective, more oil will be out, so oil prices will definitely drop in here. So definitely when we look at year 2025, energy prices, oil and gas sector may not do as well, because there will be plenty of supply. But right now the plantation or the CPO prices is tightening now, is because due to Indonesia implementing a biodiesel mandatory 40% blend. All right, so this is definitely good news for Malaysia. A lot of the plantation sectors are heading higher. Now on the rubber glove, which we knew much earlier, way back in September, that we talk about the tariff. Right now the tariff that we've seen so far will be slapping, I think, around 25%, but when Trump, that is with the Biden administration, so with Trump it will goes up to 60%, making Malaysia a bit more affordable for the American market for them to buy compared to buying from the US. So that is definitely a benefit for our counter. So on the Trump second term, according to our Bursa sector, plantation will have a minimum effect, which we have seen just now. Technology is good because a lot of the tariff will get slapped 60%, so they will opt for a cheaper version, which is actually Malaysia, where they may get roughly a 50% a discount compared if they get it from China. Rubber glove, we also seen what I've just explained there. Energy is neutral, because with the Trump mandate on drilling having more oil, that would eventually leading lower petrol prices for year 2025. On the EV, used to be EV is a subject of climate green change, but we all know Elon Musk is probably in the cabinet of Trump in here, and of course many of Elon Musk businesses deal with the sustainable energy renewable in there, so such that many of the policies will favor Tesla. In this case, Tesla will be safe if you want to buy it for the next 4 years at least. So that is going to be positive in here. Now, of course, in our VSA 360, tonight we have some technical issues with the VSA 360, so we are still fixing it in here. Now, this is the healthcare that you can look at. Let me just show you where we are right now. So you can see some of the charts we have here. You can look at Hata, right? Definitely started to move up. Green Pentagon, now it popped back to red, right? Because of the result that came out wasn't that favorable. You can see the earnings, right, was down, right? But once the next Green Pentagon is up, it's ready to make higher. So year to date, it is 21% return, right, compared to where we was last year. Last year was again 58%. That was that in January? No, this is last year. Last year, the market recovered back to 63%, and this year is still up, okay? Year-to-date return is still up 20%. So, again, I would think rubber glove like Top Glove, Hata Lega would represent some sort of a good buy, and also very similar, you see here, since the Green Pentagon, right, which occurred in 1st of October, the market started to move up. Let's look at also Kosan. And a very similar picture, and they are trading above the 200-day moving average, and every time when it stays above the 200-day moving average, that's going to be so. Out of the four, you can see Supermax, Care Plus, Kosan go for the better quality stock trade idea here, and that was, you can see Supermax is struggle to fall below the 200-day moving average. You can also look at the other sectors which I've talked about, the technology, right? And again, technology, you can look into, for start, let's look at Inari, which is a major exporter in here. Struggles above, just below the 200-day moving average in here, right? Let's look at another one. You can say Kobe Technology, also below 200-day moving average, you can see. So maybe it will cross up. Let's look at the Great Tech. Okay, 200-day moving average. Yep, all the same. So technology, just trending below the 200-day moving average. But I think we already reached the bottom. I don't think technology will recover. As I said before, a big part of it will definitely benefit our Bursa sector. Now the next one we have is plantation. So we can go to plantation, Bursa plantation. Unfortunately, I'm not able to log in into my system because you can see here only today the market pulled back 2%, but it has been making big moves since the 1st of November in here due to the mandatory Indonesia mandatory. So the stocks really have moved up in there. Okay, so next one is probably we don't have anything on EV will still fall under technology. Let's look at energy, Bursa energy, and where are we looking at energy? I'll just show you the sector here, Bursa energy. Now we can see energy continue to fall further and further. So it is no surprises, as I said before, when you have ample supply due to the more friendly policy from Trump, and you will see this market energy getting stronger and stronger in here. Now on the Chinese yuan, we have seen before, since the October when it first hits in here, that it was a time frame, and then November 4th we see this market move up to 4.3. I do not see our ringgit getting any stronger from here onwards. Likelihood to revert back to 4.6, 4.7 in here. With the Trump second term, it's back to what we used to see higher in here. Now many of the tariff that will be imposed will also mean that we have to buy more US dollar to export our products. So this also give more leeway to a higher US dollar in the incoming month. So it's better right now. You have it at slightly stronger, I would say. The ringgit around the 4.4 in here, but once you do get into the US market and ride this from maybe 4.4 to 4.8, then you will benefit from the appreciation of a stronger US dollar. That's my take to be getting into a US market. But I do think that many of our audience who is listening tonight would probably know that this will drive the market in here. Now, some of the other indicators that we have seen before, we will look into the wicks, right, which measure the US fear index. There's not going to be much of fear. You can see from here, right, from around 20 plus, the market just after the election dropped down here by almost 20%, and market now is trending below the 200-day moving average. We can go back to the 12. So that tells you there is no more fear in the market. When Kamala Harris was close to it, the market did touch higher around the 23, but what we are seeing right now, a lower VIX would bring this market closer to a higher closing. I'm sure they're going to be a higher closing this year end for Nasdaq, for S&P 500, and also for Dow Jones. This was where we were previously. So let's take a look at the KLCI right now. Okay. So let's look at the FKLI. Now FKLI, as I said before, the trend that we see so far, right, which is our auto trend line, which is part of the VSA 360, you are seeing the market is actually trending down, which is pretty much true. As long as it broke through the 1640, which is this level in here, I said the market is actually distributing. All right, we have seen the stage 4 markdown in here. So right now it's still distributing, hanging on between the 1610 and 1640. Now the good thing is there is a nice spring here. So this spring probably just paused the down movement in here. It will retest back the 1620, and when we will see where this market away. So I don't think we're going to be seeing a market rally in any coming months, perhaps only the last 3 days of the year. So far the KLCI is only up 11%, which is a bit of a disappointment. You can see been hovering in here. So it actually did stay stagnant after reaching high of 1680 somewhere in August, and since then market has moved up. The foreign funds flows, which I can't show you right now, is also showing the same thing too. All right, so this is where we are. So next we want to see is the Dow Jones. So Dow Jones, we'll use the Dow Jones futures. And you can see Dow Jones actually turned green, Pentagon breaking higher, very similar to the post-election prediction that we talked about earlier in the earlier slide. So the market continued to move up. This was that win that came out on the 6th of November, which if you look back in 2020, very similar to the market actually make about 1,500 points. But of course, with this market moving higher, the market will pull back before the next catalyst coming up. But tonight, I think the market will be able to hold. Next, we'll look at S&P 500, ES1. So very similar picture too, and the market has been up 25% year to date, which is a very good return, which I already explained time and time again. If you go back to the earlier year, right, many of my saying and many of my prediction has come right true. So if you've been following this market well, I think you would have benefited very much. It's not a rocket ship or rocket science that you can follow. So let's take a look at the Nasdaq. And Nasdaq is also very similar at 21,000 in here. Year to date return is 24%. Now compare that to the KLCI, it's only 11%. Now let's take a look at Hang Seng. Now Hang Seng will paint you a different picture, because Hang Seng, again, a lot of tariff has been raised against China in here, and you could see the November 5th was the big damper, and the market started to break back down, right? This was the stimulus that the China put in, shot back up to 23,000. Now it's back to 19,000. And I do think it's going to come back to 18,000 very soon. Hang Seng, pretty much the stimulus from the China would not help much. And you do see a lot of resistance in here. It may just tails off into the December month or year-end month. We see a bit of rally. So right now, Hang Seng suffer the same fate as Malaysia, but Malaysia not so bad. Still benefit slightly better on that one. All right, this one I've just talked about it in here already. You can see, right, the interest rate cut that we have. Previously, we thought there was no interest rate cut, but there was an interest rate cut, and that prompted the US dollar to move eventually higher to 4.4, and we will moving to 4.5 very soon. On the VSA 360 seasonality, I could not show you because of our illegible of logging to the system. But I want to share with you is the trade VSA buy call. So for tonight, we have the ABMB, which is the finance, construction, MGP, petrol, gas, TH plantation, which is the plantation. So that's good to look at. So let's look at TH. Okay, you can see TH plus, okay, plantation, which turned green Pentagon, and just today a 4% sell-off, profit taking. But this it is a good buyback. All right, good buyback in here. So we'll look at the construction, MGB, and you can see MGB actually fell lower in here, right? It is struggled. It actually went up by there was no kind of volume. You can see, right? There was a little bit of good volume here, and then the volume sort of tapered off from here onwards. Okay, so we will see, right, what's going to happen. So next one we have also pet gas. Okay, pet gas has a green Pentagon, and then the pet fall, and that's still holding up in here. Let's see whether it will move up higher from here onwards. Okay, that's for pet gas. All right, on the US side, we are looking at the strong sectors. We have the construction, the technology, construction, utilities, utility, and construction. This is for the strong US market. So let's take a look at the tech sector, which is now. Oh, where did my... Okay, let's take a look at here. Make it a bit smaller. Now, if you have any stocks that you want me to look at, feel free to pencil those in. I'll be happy to look into it. Yeah, this is the way to do it. So let's look at now. So now is this was a call on the 12th, okay? So which came in on this day, on the 12th, 6th of November, 7, 12th of November. This was on the 12th of November here, all right? A good move, and you got this on the 12th, still valid, and you have next one. We have CMG. This is a computer modeling. CMG is construction. Chipotle, and you see this one just turned green Pentagon on the 12th too. All right, so it turned green Pentagon on the 12th. So that's the Chipotle Mexican grill. All right, let's take a look. Another one, STG. CZ. This will be Constella, and you can see it was turning green Pentagon on the 11th. All right, 11. So that's a good one too. All right, let's turn our attention now to ETF. Okay, ETF. I do have a ETF. Oh, that's all I have. All right. So the emotional market right now is certainly bullish. If you have missed out, all right. So there were no ETF. I don't think I prepared the ETF, US ETF, but those are the stocks. So let's look at the fact right now. The Malaysian market right now is going through stage 4, all right, which is not good. The only market that's available right now is the US market. It's in the stage 2, right? It's a good time to be buying because it's a pullback. We will see the best months of the year, which is this November month, continue to be running. Make no mistakes, your money is best pooled into some of the sectors that I've talked about in the US market. In the Malaysian market will stay a bit stagnant, right? So you can also use the Smart Robi in our Smart Robi apps, the Pentagon Guider with the US market, that will put you into it. So as a summary, the KLCI is unlikely to take off, right? There's going to be just a small rally coming to the year end. All right, stick to the Pentagon Guider as your guide and trade over to the US side with the weakening ringgit. Now remember, US dollar will get stronger in here. So live well, trade well, and that's all I have for tonight. Our VSA 360 membership, we thank for those of you who have participated on our 11/11 sales. We thank you for your support, right? We still have our Premium 360 membership ongoing in Drive in here. And if you like to join our membership and use our indicators, you're most welcome. So that's all I have, and our premium membership will continue the coaching onwards. Now, if you have any stocks that you want me to look at, feel free and let me know. So don't forget to join our Telegram chat room for all our free stock market information. So that's all we have for you. Thank you for coming, and I'll see you on our next program.